Afternoon and welcome to AROBS Q1 2024 results call. My name is Zuzanna Kurek and I am Investor Relations Manager at AROBS Transylvania Software, and I will moderate today's call. On Tuesday, 14th of May, we have published our Q1 2024 financial results. You can access them today on our website in the Investor Relations sections, as well as on the Bucharest Stock Exchange website on AROBS Investor Profile. Before we begin, I would like to mention that this call is being recorded and the recording of this call will be uploaded on our website by tomorrow, the latest. As stated in the call invite, you automatically and implicitly consented to being recorded. If you do not consent to being recorded, please leave the call. In terms of organizational aspect, we will follow our standard call setup, which means we will first deliver a presentation outlining the Q1 2024 results, and we will follow up with a Q&A session when you will be invited to put the questions towards the management. Please note that all the participants should be on mute. If you would like to ask a question, please type it in the chat box. Feel free to do it during the call and we'll answer the questions in chronological order as soon as the presentation of the management is over. Please note that only asking questions via the chat box is allowed today. Last but not least, I would like to mention that we might be making today forward-looking statements during this call regarding the future performance of AROBS Transylvania Software and that our actual results may differ materially. We encourage you to review the disclaimer that you can see right now on the screen and which is included in all of our investor presentations, which you can find on our website. This disclaimer applies equally to all the statements made in today's call, and I am referring both to the management presentation as well as the answers provided during the Q&A session. Now, I would like to, before we jump to the presentation, I would like to introduce the management that you can see here with me today that is going to present the Q1 results. I am joined today by Voicu Opran, Chairman of the Board and the CEO of the company, as well as Bogdan Ciungradi, Chief Financial Officer. Now that we have concluded the organizational part, I will pass the floor to Voicu to share with you introductory remarks regarding our performance in Q1 2024.
Yes, hello everyone. What a quarter, I would say. It's a global and a difficult quarter for the whole global IT industry, Romania included. And what we saw is company tendencies to focus mostly on the operational and budget constraint for software development. And that continue and that actually in some verticals of the business started in the Q1. But despite all the challenges, we maintained a steady level of revenue from the software service segment. And even more, we increase revenue from the software products, as you will see. Our goal is to continue also the organic expansion in the European Union and the US market, to be closer to the customers and to the global technology centers, and on capturing new opportunities in embedded technology, mostly non-automotive, and also in the cybersecurity. So those are the area where we focus for the next period on growing. Another focus is the continuation of the integration process of the entities that joined the group. In some cases, we will do some absorption of the acquired entities to simplify the structure of the group and facilitate operation between companies. And of course, above all, to reduce the cost and redundant function and maximize the synergies. That is maybe I would categorize the Q1 2024. And maybe of the investor already saw in the market companies firing or closing operation centers in Romania. What we saw, it's also that we discovered that are continually attractive for our we have a big attraction as an software services, especially because of our business model, which is to deliver and which is also to provide solution to our existing customers and new customers. Going further, a few data. Turnover -5% versus Q1 2023, and we'll go deeper with what is the reason of that. And you will see is not as dramatic as might look. Normalized EBITDA that allows us a 20% margin. Normalized net profit of 11% margin, profit before the tax and net profit. Those are the consolidated key indicators that I would emphasize for Q1. What is really important is also to mention that we are sure we do believe that the budget is in continual development, and we can meet the budget that we present previously. Going further, all the consolidated, the interim financial statement are based on IFRS, and I would go and let Bogdan to continue with the consolidated results.
Thank you, Voicu. Good afternoon, everybody. Thank you for joining us in our quarterly results presentation. I would start with the P&L, the financial performance, where in the first quarter we had, in terms of revenues, a decrease of 5% from 110 to 105 million RON. This is mainly driven by the decrease in the revenues we had in the first quarter for the integrated systems, which are project-based revenues, very much dependent on the timing of the signing of the contracts and project implementation. In terms of profitability, gross margin, we have a decrease in software services from 29% to 23%. This is coming mainly from the increase we had in the cost side. Revenues were steady, just -1% decrease, and in the coming slides we will elaborate on this. The other verticals, segments, software products and integrated systems, in terms of margin, gross margin and profitability, they maintained a performance similar with the previous year and in line with the budgeted margins. Susanna, if we can move. Looking at the profitability, the normalized EBITDA, 20.6 million RON, as a margin is 20%, and comparing with the annual budgeted EBITDA margin, it's slightly better. The budgeted normalized EBITDA margin was 19%. So even though we had lower revenues, we managed to maintain the normalized EBITDA margin. Same for the normalized net profit, 11.7 million with an 11% margin, better than the 10% normalized profit margin that we have budgeted. We continue to present our performance, splitting it between organic and M&A activity. M&A we always defined as the companies we acquired either in the previous year or in the current year, so they don't have a full year of performance. In this for Q1 2023, the companies that we consider it as M&A are the companies we acquired starting with end of January 2023, and we are talking about AROBS Software Moldova and AROBS Track Moldova. Sideral Polska, now rebranded as AROBS Polska, Future Workforce Group, and AROBS Pannonia. While if you can please go back. While the companies that we previously registered at M&A, now because they have full year performance, they are part of the organic performance. As we can see, the organic business contributed in this quarter with 92% in terms of turnover, while the M&A part was 8%, increasing from a 2% contribution to Q1 2023. The main reason for the increasing contribution is that some of the companies have only 2 months in 2023, and the Future Workforce Group entered only in the second quarter in 2023. So we see their performance and their contribution in 2024. Looking at the EBITDA margin, we see a difference between organic and M&A. While in the past they were more aligned, now we see that the organic companies are delivering 17% EBITDA and the M&A only 6% EBITDA. Why? We have some of the companies underperforming. AROBS Polska, which last year was break-even, this year in the first quarter came with some loss. While for the Future Workforce, we see a slower than expected development of the sales and profitability for the first quarter. If we can move on. Looking at the turnover, as we learned during the past period, software services are the segment that is delivering the most significant contribution. This quarter, they accounted for 82% of the revenues. As I mentioned, with a very slight decrease of -1%. The software products, they are contributing with 17% to this quarter revenues. And they, as a dynamic, they have the +14% increase, while the integrated systems only account this quarter for 1%. Can move. Okay. Going deeper to the software services segment performance, looking at the revenues, if we split them between organic and M&A, we see that on the organic business, we have the -8%. So we have a decrease in revenues coming, as also Voicu mentioned earlier, from decrease in delays in signing some of the new projects, mainly in the electrification segment of the automotive vertical. While on the other hand, we have the M&A who is coming with a 7.2 million RON contribution to the segment revenues. Cost of goods sold, they have increased by 4.2 million, and this is coming from the companies we acquired, from the cost of goods sold that they are bringing. Looking at the cost structure from function point of view, we have the increase in salaries together with the share option program of 9.6 million, while the third-party costs are decreasing by 5.9. The increase in the salaries, it's partially coming from the companies acquired, so from the M&A part, but also there is an effect from the elimination of the exemption on the income tax for the IT employees. However, this effect is partially offset by a slight decrease we have in the average number of employees in Q1 compared with the average number of employees in 2023. Let's move. Software products, they have a healthy increase of 14%, half of it coming from the organic business, half of it coming from the new companies acquired. There is a very nice similarity in terms of gross margin between the companies acquired and the organic business. So they stay at the same level of 45 to 46%. While also we can see that even though the costs have a slight increase over the revenues, we keep the margin around 54-55%. Integrated systems, they are significantly, their quarterly performance can be significantly affected by the timing of the projects. What happened last year was that in the first quarter, by the end of March, we finalized and invoiced the biggest project we had in 2023. That project accounted for 61% of the annual revenues. While this year we don't have the elephant yet signed, there are many projects ongoing in terms of commercial development. What we have now, we have the projects we signed by the end of last year, and they provide a steady revenue as we budgeted. There is no surprise in terms of performance looking at the monthly level. The projects we have accounted for slightly more than 50% of the budgeted revenues. The difference will come, we hope, from the new coming projects that have significantly bigger values. In terms of revenue and cost recognition, I just wanted to mention that by moving to the IFRS standards, we had to have an adjustments on the statutory numbers, including those that we presented the last year in March when we were reporting under the statutory regulations. So the revenues and costs are adjusted for this year. The numbers we present with 1.1 million, both revenue and cost, while for last year the adjustment was almost 20 million, both on the revenue and the cost side. Looking at the other cost on the sales and marketing, the increase of 1.4 million that we see in this year compared with the first quarter of last year is fueled mostly by the companies we acquired. They are bringing also a cost of 1.2 million for the sales and marketing, especially the future workforce group, where we have both sales and marketing team in Romania but also in the UK. General and admin expenses have a similar increase with the sales and marketing, 1.5 million, out of which the most part is coming from the M&A, 1.1 million, but also from M&A companies, not M&A costs. But also we have a 0.4 million increase coming from the new share option program that was implemented last year with effect this year. Last but not least, we have the balance sheet, where I would like to underline the healthy financial position that we have. Okay. So the healthy financial position, we have the bank financing debt ratios, which continues to stay under 1, which is very good. But also we can see that the net cash position, meaning cash less the debt, the bank debt, it's improving, it's increasing by 13.5 million RON. That was in short our presentation of the financial results. Now we are waiting for the M&A part, Q&A part.
Thank you very much, Bogdan and Wojciech. This concludes our presentation of the results for Q1 2024, and we'll now open the floor for questions. If you would like to ask a question, please type it in the chat box. We will read each of the questions individually, and we'll address them one by one. I see already we have several questions. While we are addressing them, please feel free to type them, because once we run out of the questions, we're going to conclude the call. So the first question is the following: what gives you confidence that the demand for software services will rebound? As it stands, you need to grow revenue over the next 9 months by 20% to meet the 2024 budget. Is this based on global trends, or do you have an order book of work that has been agreed but not yet started?
Yes, thanks for the question. There is a combination, I guess, between order book. Starting in March, we had, for example, a big travel industry group in our turnover that accounted only for a month out of the 3. That's one. Also, we do have an intense sales activity in various areas, including automotive, with the prestigious player that continually delayed, starting new projects. So the order book is, I would say, solid, and we have confidence about the 2024 budget.
If I can add, Wojciech, there is also we will have also the effect of the transaction we announced by the end of February. It's the Infobest group, which with which we think we will finalize the transaction by the end of May. So we will have 7 months of their performance included, which were budgeted 6 months. So we took them into account, and so when you compare the revenues budgeted, you should know that they are also there.
Yes, and talking about M&A, I would like to add that we are in discussion with various companies in the due diligence phase, even advanced discussions that also might boost the revenue on both top and bottom line. Because as a strategy, M&A strategy is to buy companies that are providing also value on the bottom line.
Going to the next question: what is the timing for delivery of integrated systems revenues?
I guess was mentioned already, Q3 and Q4. They are the key areas. We are involved in various bidding and projects that kind of were delayed, and we do believe that there is no turning point, no turning back, I guess, for Romania for not digitalizing various sectors. So I would say latest Q3 and Q4 we'll see delivery in the integrated systems.
Thank you. The next question: based on table at the top of page 13 in the report, EBITDA margin on companies acquired in 2023 is materially lower, 6%, than the organic businesses, 17%. Is this because of the type of businesses acquired, still haven't achieved synergies within the group? I believe Bogdan already addressed it during the presentation, but maybe if you'd like to put some more color on this question.
Sure.
Yes, sure. I would add AROBS Polska is now it ran into the reorganization because they didn't generate what was expected from them. We also, as we took them from a Swiss group, we discovered that the contract was not valid, and that required us to continue and to expand to do more sales in order to get new contracts, especially because that company is focused on the aerospace and the space industry. On the other side, the future workforce was on extremely high growth, so they grew 50%, and we didn't want to let that growth to stop. So it was actually on purpose. We tried to emphasize and to put some more fuel into the future workforce, especially because they are acting on the new area that is very hot right now. And I'm talking about big data, automation, and robot process automation, plus low code, no code. So those are the latest trends, and we saw big demand, big increase, and sometimes we need to go ride the wave, I would say. And about synergies, we are working right now. Actually, the vertical of space is in correlation with AROBS Engineering from Bucharest. That's the entity former Enea. And we are going deeper to find and to integrate both companies.
Thank you. Voicu, next question. Will you be making changes to the SOP? Shares awarded only with a strike price, longer lockups, as it seems the SOP is actually creating overhang risk for long-term investors.
Oh, yes, indeed. That's on our agenda for this year, for sure. Stock options plan need to be redesigned now that we also attract and add in our shareholder structure the employees. They do like the stock, but sometimes they like more money than stock. Unfortunately, so definitely the stock options plan need to be redesigned together with entering into the shareholding structure of the institutional investor. So that's something that we'll address shortly.
Thank you. The next question, are there any further wage hikes to be implemented in 2024, or does the first quarter of 2024 represent the new normal?
At this moment, I would say the market is pretty stable. I'm not seeing any hikes for 2024. Though on some specific area, maybe artificial intelligence, big data specialist, there might be some, as there is a big demand, but I'm not seeing a wage increase at the course of this year.
The next question, SOP. Are the SOP programs going to be continuous practice for AROBS in the upcoming months and years?
Not this specific. So the stock option plan program will be reinvented, mostly moving into the long-term incentive plan. Though we'll see some maybe potential change, together with the new institutional investor that hope will come in 1 or 2 months.
In which segment of cybersecurity are you active, and how much revenue does it generate now and will in the future?
we do provide cybersecurity for our existing customers, and what we do offer is specifically penetration test. We do diagnostics on specific platforms, and we come up with results. So we act in a way with the cybersecurity. We act more like as a consultant. And that's a change of a little bit our way of doing business, because before we were more an implementators of different procedures, different application. So now we act more as a consultant, and based on consultancy and the results we provide to our customers, then we'll implement different cybersecurity protocols or even software applications.
The next question is, can you indicate what kind of revenues Infobest should generate on a full year basis?
If I remember well, Bogdan, please correct me if I'm wrong, we are talking about approximately 5 million euro, with an EBITDA similar with the one that we generate.
Yeah, it's 5 million plus euro turnover.
Okay.
With the same EBITDA margin.
And EBITDA margin is similar to what we have in AROBS right now, I guess.
Yes, for the software services.
Yes, exactly.
The next question is related to the M&A strategy. What are the main criteria when deciding to invest in an M&A target? What are the main guidelines for the integration of the acquired subsidiaries? What are you aligning across the group, and what remains unchanged?
Wow, Joanna, that's a big question, and we can write maybe a thesis about main criteria, but definitely, as is stated in our M&A strategy, what we do is we try to find companies that complement us or add value in the area, or for which we can add more value in the terms of customer base. And I can give you some example. We were able to emphasize, because being part of AROBS Group, some of the turnover of various previous M&A targets. And main guidelines, we do run complex integration. Mostly we keep operational running as they are, and we try to make or create synergies out of the sales, marketing, also financials, and we align first operational. Initially we'll align operational, and then we work on development. So what remain unchanged is mostly operational, if that's good. And what change is mostly, I would say, the what is operational reporting, and some other areas where we know that we can add more value to them.
The next question, does the order book and software services cover the rest of the budgeted revenues for 2024? If not, what percentage?
Usually we work with long-term strategy, and because we work on complex projects, and those are not the type of projects that suddenly stop. Despite that, we saw in the electrification some of these events, but in the rest, I would say that in the currently order book, I would say maybe 60 to 70% are covered for the budgeted revenue of 2024, maybe even more. I'm not prepared specifically, but roughly I would say 2/3 are covered by existing orders, because mostly, as I said, we talk about product that are in various life cycles, and they cannot be stopped. They can be trimmed down. Maybe what we saw at least is to reduce maybe the QA team, especially manual. That's overall in the whole industry. I would say QA, but QA usually in our project is maybe 10 to 15%, maybe 20, I would say, but that's all. And all the rest, the software development remain unchanged because mostly we are talking about critical projects for our customers.
The next question is there any goodwill related to AROBS Polska?
Yes, the amount of goodwill we accounted for, it's around 2 million RON.
Then we have a set of 2 questions. Before I go ahead to read them, I would like to kindly invite all of you to type your remaining questions. Otherwise, if there are no more questions left, we will conclude this call after answering the ones we have received so far. So the question goes, when can we expect to see improvement in the bottom lines of the newly integrated companies? I would expect that you target a reasonable EBITDA margin around 20% long-term for them. And I'm curious, when can we expect that from the moment of acquisition?
Here, István, I would like to say that we try first to understand them, to understand their strong point, their weak point, and then jump in and implement the integration. So from the moment of acquisition, I would say to the moment of implementation, I guess minimum it is 1 year. Plus, we need to understand if we need more resources or key people that are better to implement our strategy together with the target.
The next question, lots of companies lost business recently in Romania. Are there good opportunities to poach good employees instead of new M&As?
Yes, good employees. Now there is not anymore an employee market. I would say now it's maybe a good company market, but here is M&A. It's also important because there we try to explore and enter into the new geographies. So we try to add also customers as well as competence into specific areas. And here I would like to underline Future Workforce, which is the top leading company and also diamond partner of UiPath. So it's the biggest company doing RPA implementation, maybe after the big four that already jumped into that. But let's say independent, doing RPA. So those are the companies where it's important for both competence, also customers, and the new way of or the new model of doing business, because they are more related to consultancy than to what we were doing with doing just software implementation.
Thank you. We have now exhausted all of the questions sent by you on the chat. So we will be concluding this call. Just so you know, the next time we're going to hear each other is going to be on 3rd of September. This is the next results call we're going to hold after we publish the H1 results on 30th of August, on Friday after the market closes. We thank you all for your participation today, and we wish you a great day.
Thank you.
Yes, thank you very much. Thank you very much.